Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking currencies, and the euro currency seeing better days as we see a modest sell-off here. I think there are a couple reasons why we saw the move lower. Obviously, we're trending lower back to that 122 level. It's a very key level psychologically, moving average-wise, but there's a bigger level just below the surface. And if you take the 5-year range, the 50% midpoint of the 5-year range is 121.67. We are just above that. I think that's the level that's got to hold if we're going to maintain any kind of bullishness or non-bearishness towards the euro currency, which has been doing very well, especially against the dollar for a lot of different reasons. But I think that ultimately the euro currency is just seeing, again, it's a month-end sell-off. It is, we'll have to wait and see what happens as we move into March. I don't necessarily want to throw the euro currency out the window. It's had a very strong performance since early 2017, and right now this may just be a buying opportunity. We'll have to wait and see. If you look at the dollar, it's seen obviously better days, but since 2017, it's just been on pretty much a straight move lower. It's seeing its best bid over the last few weeks, and that's obviously one of the reasons why the euro currency coming off. And I think that the dollar trading off not only what new Fed Chair Powell said yesterday, but also maybe they're shaking off some of the fiscal woes that we've been trading off of out of Washington. Likewise, if the U.S. economy gets its legs back under it, we did have a modest markdown of the most recent GDP numbers, but certainly nothing to scare the markets. But I think ultimately higher interest rates here in the U.S. is going to translate into higher dollar. That is in effect having a negative impact on the euro currency. But again, that 121.67 level is the level you have to not only trade through, but see a sustained trade, settlement, whatnot, all the way through. So let's not just touch it and say we're there. Let's see a trade that really builds momentum below it. We have not seen that yet. Lastly, let's look at the ECB. They had some lower inflation marks, which may put a little bit of an obstacle ahead of their rate tightening cycle. They're not raising rates yet, obviously, but withdrawing stimulus. That has obviously been another reason why the euro has been outperforming the dollar, despite the fact that the Fed is raising rates and the euro and the ECB is merely talking. And at the beginning stages of its tightening policy, it's had a much more positive effect on the euro than it has on the dollar. So right now, I think that the ECB may need to take a step back. That also may be lending a little bit of sellers to enter into the euro currency. Again, the key level here is 121.67. We're not there yet, but we're drastically close, and we'll have to wait and see what happens in the weeks and months ahead. This is Todd Colvin coming to you from the floor of the CME Group.